Hello and welcome to our free financial forecast. Today is Thursday, April 1st. I'm Robert Charles, and in this video you'll discover all you need to know to trade and forecast natural gas. The reason we're looking at natural gas has to do with the fundamentals in the sense that, really geopolitics. We have the Russians saying that the Europeans and all Western nations are going to have to pay for Russian goods in the rubles, and the G7 saying, well, we won't do that. You have to honor your current contracts. Now, the Europeans, you must understand, and you probably already know, get a substantial portion of their natural gas from Russia. So if they refuse to pay in rubles and Russia won't sell it to them, the obvious place for them to turn would be the United States, who produces pretty much all of our own, in the United States, our own domestic natural gas, and therefore could, at least should be able to export some to Europe. So we're taking a look here at the United States futures natural gas market off the NYMEX exchange to see what the market thinks, see if the market thinks there's going to be some additional demand here for natural gas based on the whole Russian ruble disagreement. Now, let's take a look here. We have the long-term weekly chart, medium-term daily chart, and our short-term 60-minute chart. We'll start with the weekly chart. Now, the weekly chart has been going up for a long period of time. So there's been quite a move in this market. It really started back in March. Crude oil started moving up in April. So both of these major energy markets have been going up for a substantial period of time. And what you see on these charts are our clouds, the Ichimoku Cloud, along with our proprietary wave count, which is based on the cloud wave count system and some targets. The cloud system has all of these elements in them, so we're just making use of them. This market is above the cloud. You can see all these prices are above the cloud. It's in an uptrend. The other thing you have to watch in the cloud system is this dark blue lagging line, which is also above the cloud. You also want to see how it's interplaying with price. You can see it's been inside price for some time, but this market's heading up. We are also above both of these two moving averages. The longer term and stronger is the red. It's called the baseline. The conversion line is blue. It's a faster moving average. We are now above both. We actually have, for us, one of our proprietary buy signals this week. So as this week closes, this is a setup. Now, what has to happen to get in is you need to trigger above the high. If that happens, here are the targets. You can see the price targets yourself. This is a resistance zone. The target is this resistance zone. The most likely place inside this target zone for the price to go to is the black line. We call this the sweet spot. So these are the targets for this weekly chart. And you can see that recently, after the last pullback, that's been since December, right around Christmas time. And we've been heading up pretty much ever since. We did find some resistance at this baseline. You can see how a couple of times I would hit it and backed off. But it's now broken through it. A break above that high almost certainly will take us up to these targets. A very high probability scenario if that happens. Taking a look at the daily chart next. This is the last pullback that you saw on the weekly chart right around Christmas time, a little afterwards, beginning of the year if you prefer. 0, 1, 2, 3, 4 with a substantial 5. Now, we had some buys down here. We're a little late to showing you this for the free forecast, so these trades pretty much have already worked. You can see they've hit the target. These two buy signals, see these two green arrows? Again, with our setups, they have to take out the highs. They're pretty much in the same location. You wouldn't take both. You'd choose one or the other. Either way you went, you made some money. Now, again, we haven't yet hit the sweet spot, this black line. We have at the beginning of the target. Normally, the way I would recommend taking our trades, you take some off at this and then expect it to head up to the black line. That's going to put us right around these old highs here. So probably go a little bit short of that black line if you are long here in natural gas. Or you're bullish here on a short-term basis. So essentially we have probably more upside to go in this market. It isn't particularly overbought. It's mildly overbought, but not really that strongly. Plus we have a buy signal on the weekly chart. Let's take a look at what this short-term 60-minute chart may be telling us. The last retracement, and it was the beginning of this latest up move, was back around the end of March. So since the end of March, this market has been going up fairly steadily. Broke through the cloud without much trouble. You see the lagging line is above the cloud as well. That means we're in an uptrend. And the wave count is 0, 1 with a 2. Substantial 3, it's backed off to a 4. So our targets are coming from the active waves, which is the 2, the 3, and the 4. What we're expecting at this point is to break up into a 5 wave, meaning we take out the 3 Here are the targets for the short-term chart. It's not in a bad position. If you're bullish, short-term natural gas, breaking these highs might be a good place to take a buy. The only caveat actually there are two caveats. The momentum is down. The shorter-term moving average is below the longer. So the short-term momentum is down, although if we do break these highs, I suspect that will change. The other one thing to watch out for is look at where the lagging line is inside of price. Now, the fact that it's inside of price means the price is acting a bit as resistance to that lagging line, and that's going to be a bit of a drag, a hold up on price heading up. In a few hours, however, even if we just go sideways, that lagging line, it will move forward and it'll end up over here above price in a few hours. So it won't take very long in terms of time for this lagging line to clear through that price, and then there'd be nothing holding up the trade here. So there's a good looking short-term buy if we break these highs on the 60-minute short-term chart. We already are in a buy on the daily chart, and there is another setup on the weekly chart. So the natural gas market is looking bullish overall. It's in an uptrend in all three time frames. Market's moving up, suggesting that the market may think that the G7 is going to hold to its guns and start buying some natural gas from the United States, and less, if not none, from Europe. I'm not exactly sure if there'll be none or they'll reduce it. We'll see. But the natural gas market is signaling more up movement here. Of course, we are in an inflationary time as well, so it'll be another pull on natural gas. I doubt all of this is the Russian scenario. Oil has been moving up and whatnot, but I would point out, you notice how oil's down today. So most of the inflationary markets, including the metals, are down today, whereas natural gas continues to rise. So I do think there's something to that spat that's going on between Russia and the Western nations in terms of paying for Russian stuff in rubles or not. And natural gas here out of the U.S. would be a beneficiary if the G7 decides not to do so. So that's our look at natural gas. I hope that's helpful if you're interested in this market. We'll be back on Monday with a new free financial forecast in a different market. I hope you have a great weekend. We'll see you then.